Hello and welcome to subsection 3 of section 3, where we dwell into the inner workings of Wyckoff, into liquidations, into understanding that price is now consistently undergoing these areas. And again, for a mini recap, we look at this price action here on a 5-minute and we realize instantly that we have distributions that happened here. We have distributions that happen in here on lower time frames. We understand that we've undergone accumulations in this area here. This is the markup. We understand that there's distributions that happen inside of this price action, right? Highs liquidated. We have the moves down. Overall, that results in another accumulation. The accumulations lead us to have higher prices, resulting in overall distributions. We see lower prices into accumulations on lower time frames, moves up, into another accumulation, moves up, into overall distributions. That might become potential accumulations to move higher, which now might become an even bigger distribution to move lower. Most likely, I'm expecting it to move higher. So in this specific case, I'm looking at it to become an overall accumulation to continue moving higher. However, we understand that prices are consistently doing what? Shifting between accumulations and distributions. Why? Because there is always the creation of liquidity and the manipulation of it in certain ways, and more often than not, based on structure and based on the types of supply and demand that we're looking at, we are able to potentially get involved in certain areas. So when Wyckoff occurs, there are some easier ways to begin to spot it. And this is going to be one way that you begin to understand which type of Wyckoff schematics you want to get involved on. Because not all Wyckoff schematics, as you remember from the last subsection, if you haven't seen it, make sure you watch it, can be delivered to you in a multitude of different ways. Remember the snowflake rule. As long as there is some kind of liquidation, anything like that, there's Wyckoff occurring there. Now, Wyckoff is not always going to be clean. And the beauty of Wyckoff is that because it happens everywhere, you have the choice of whether a Wyckoff schematic is worthwhile of your entry or not worthwhile, right? That's the beauty of understanding this way of trading. You have multiple areas where you can get involved, but you don't have to get involved. And because you can get involved in any area, you have the choice to do so or not. Now, let's talk about schematics themselves. Okay, and this is where we're going to get into a little bit of the labeling. So, very quickly, there are ultimately two. Let's do this here, actually. So, let's just go to this right here. Let's go to an empty space. There we go. There are two schematics that you ever need to concern yourself with. Now, we can get deeper into this, and we will in a second. But the two schematics that there are is a type 1 schematic. Oops, forgive my bad typing. There's a type 1 schematic. Okay, let's put that on the left right here. And there is a type 2 schematic, okay? These are the only two types of schematics that you're ever going to see in this market, ultimately. And there's going to be very weird and awkward versions of them, but this is how they are going to be delivered to you, okay? The type 1 schematic, okay? Let's consider we're in a bearish trend, and we're looking for whatever price action is happening in here, right? So this, again, as we understand from a snowflake rule, this, if we circle it, is what? Wyckoff. There's accumulation here, right? There's a transfer of orders into other orders that is resulting in this move right here. Now, a type 1 schematic ultimately is explained by what you could call 3 liquidations, or a schematic with a spring. Now, let's talk about all the labels and everything of that sort, because this is where you're going to learn about the first things about Wyckoff, because by now you should understand that Wyckoff is nothing more than an explanation for everything that you've already understood, right? So you do not need Wyckoff to trade. That's an answer to one of the biggest questions that everyone asks. You do not need Wyckoff to trade. The reason I use Wyckoff to trade is, for instance, if I have an area and I just see price come in and then break, right? And then you might want to get involved here or here. That's potentially like your MentFX block, confirmation MentFX block. And again, if you don't understand what I'm doing here, that's because you have not watched the previous videos. So watch all the subsections of all the sections. So you could have this MentFX block shift or just normal price action shift, right? Break a structure. And many people are very successful getting involved in this area or this area, and then they catch the move higher. Now, what's happening here is there is, again, what? A liquidation of potential lows. And if we put a box around it, guess what it is? It's Wyckoff. Now, in this specific case, there's not perfect Wyckoff. And what I mean by that is it didn't undergo every single step or phase of Wyckoff the way I like to see it undergo, right? Which is why in some cases like this, I might myself not get involved on the trade, even though it might be within proper configuration. Okay, so before we actually talk about this too much, let's actually deal with type 1 and type 2 schematics and understand them a little bit better. So the idea of a type 1 schematic is you have price that is being delivered lower, right, coming lower, and maybe let's say it's just being delivered lower, lower, lower. It's all good, right? And then all of a sudden you have a hiccup. This is known as your potential, right? So it's a bigger pullback. There's more. You can see more potential power entering into it. Maybe this ends up consolidating a little bit more, right? You have something like this. Like you can tell that there's a hiccup in overall price. This is what is known as a change of character. It's also known as a preliminary support, which we'll talk about in a second. Then you have price, maybe bottom out, something like this, and then it bottoms out. Ultimately, it creates the major move, which is the selling climax. After this point, you usually have what we like to call the AR into an ST, which tests some area inside of this zone right here. So we'll talk about that in a second as well. An ST usually occurs somewhere here. Then you have usually, a move back up that either creates more liquidity with this high or that comes a little bit higher, right? So either one is possible. So you can have something like, you can have a move that comes here or a move that comes here. Both are possible, but let's imagine this move here. That's fine. So that's a little sign of strength in phase B. You have potentially more lows being created. We don't know. Then you have a liquidation. This is your first step of, first of all, again, you can see that structure is still bearish, right? Structure is overall being delivered to you. Even though this is shifting potentially bullish, it's overall still bearish. You'll have a liquidation of the selling climax or the ST. Now this liquidation can come below this ST or below the selling climax. Both are considerable for an ST and B. And again, as I'm doing this, everything I'm saying is vital, okay? So if you want to know Wyckoff, you should be taking notes on all of this, right? I'm not going to draw every single thing. I'm going to do my best to draw every single thing, but I'm walking you through it. So already you should understand that when price is coming down hard, right, into something, it doesn't matter, even if it's just coming down normally, it's going to stop at what we call the preliminary support, and it's going to have some kind of move that, or like a bigger retracement. It doesn't have to have a consolidation. It can just have a larger retracement than previous retracements. And that is indicative of a slowing in price. Anyone can say that, right? Even retail probably understands that there's a slowing in price here. But what's actually happening is it's creating a potential support where it's already starting to create liquidity where people are going to get liquidated by. Now, the major move down, ultimately, usually, is going to be known as your selling climax. What's happening here is most dumb money is now finally getting involved in sells, right? So this is why we're undergoing accumulation. And as they're getting into all those sells, guess what the composite man is doing? Getting involved in multiple buys. We have a move that comes up, and usually whatever swing it forms is known as your automatic rally, the AR. And we're gonna label this in a second too, but I need you to understand every phase of it to basically understand why these schematics are somewhat important. Your AR into what we usually call the ST. Now, almost always, your secondary test, known as the ST, is going to be above or at the level of the selling climax. It could go a little bit below, maybe like a tiny wick, but usually it'll be at that level. Because what it's doing is it's engineering fake liquidity. It's engineering fake lows. It's making people that really do believe it's going to be a buy from here, buy into it early, right? So even when you might be right about the fact that there's going to be a buy in this overall area, you buying here and having a stop maybe here or even lower is going to get you liquidated in the future when price breaks lower. And that's exactly what Wyckoff does. That's why Wyckoff undergoes. It gets the dumb money out of the market, even if they're correct, and gets the smart money involved in all their positions to take to the actual profits. Then after this secondary test, which usually will test some demand zone in here or will make almost equal lows, or sometimes it can even end up a little bit higher, all those are possibilities, you will have a move up that can either stop within this high, so it can be anywhere in here, it can stop, or in this case, that comes a little bit higher. Usually, you will not see this make a huge run. If it does, you're not really undergoing a proper type 1 Wyckoff schematic. This can also I do not like to see this, but it can make a high above this preliminary support, right? This high, whatever this high is, it usually doesn't want to get above here because that would be overall structural shifts, right? But if it wicks it, that's okay too. But usually I want to see this inside of it, right? So there's you're going to have to go back in time, find your snowflake rules, circle multiple areas, and recognize what type of schematics work best and what schematics you like to spot best. Because ultimately, I can explain to you the schematic over and over again, but until you begin to see it live, and again, you can work through any of my MentaFX trade ideas that I send out. I almost always enter on Wyckoff, even if it's on a 5-second, and you will see price undergo this in one way or another. So, like I said, you will have this little up move, which I call the sign of strength in phase B, which gets usually above here or can end inside it, right? Because all doing is again, potentially engineering liquidity either on behalf of sellers or taking out some sellers so then they can push price lower. Then what you will have is an ST and B. Now this ST and B has to take out the ST. there's no point of an STNB if it does not take out the ST. Because this point, whether it's a little bit lower, on par with this, or even a little bit higher, is liquidity. There are going to be what? Stop losses and sell stops below that liquidity. So the ST in phase B, which is the next point, and again, I'm going to label this for you after, is going to come and take out this low, right? And that low can be taken out, and it could make equal lows with this, or it could break lower. Oftentimes, you're going to see this ST and B right here, this point, break lower than this low. The break lower than it, right? So let's actually show that. So usually you're going to see a break lower. All it's doing is it's taking this liquidity and it's liquidating it, right? So what you have is you have a PS, you have it liquidated, you have a selling climax, you have it liquidated, and now you have this ST and B. Now, because it's a type 1, you will then usually see some kind of form of multi-level price movement inside these areas. It could be instant, it could be for a while. You could have multitude of price going in here, but usually you don't want to see this price come and ever take out this high. When this price is taken out, it means you have a confirmed schematic. But in this case, we have a type 1, which means we still need to undergo a potential spring, okay? Now, a spring will liquidate the ST and B, and usually the selling climax also. In the case that this ST and B didn't liquidate the selling climax. Now, the most important thing for the spring to be valid is that it actually gets below the ST and B, because that's the point of the spring. The spring needs to liquidate the ST and B. The ST and B needs to liquidate the ST. The selling climax does not have to be liquidated in either of these cases, but you are more likely to see a schematic work and be valid and actually be a proper accumulation in the case that it does liquidate this point. Because what's actually happening, right, even if we have something like this, is we're liquidating every possible buyer that was in any of this market that was thinking it might be buyer, as we're enticing multi-level sellers. Because again, remember, when this selling climax happens, that's when most dumb money begins to sell. So when they start to see potential like moves like this, or even lower prices that are made here, they're wanting to get into more sells. And what you'll usually see after that is you will see the sign of strength. Now, this sign of strength can come instantly, right? That breaks above all these highs. And usually you want to see it break above either the AR or the sign of strength in phase B. If there is a sign of strength in phase B that is higher than the AR, more often than not, you want to see the sign of strength. This would not be a sign of strength for me. The sign of strength would be above that point, right? So what I'm saying is you want to see the sign of strength, get above, and usually be quite impulsive. You don't want to see it wick, ultimately. You want to see a proper sign of strength, because what it's showing you is you have actual buyers flooding into the market on behalf of the composite man, which after liquidating all the buyers on behalf of dumb money, you have them actually come in properly, right? After multi-level sells. And sometimes you'll see moves back up into these areas, right? Because these areas are now functioning as what? Demand zones, right? Because in those zones, there are potentially unmitigated areas where price needs to run to. So what you'll usually have is the sign of strength that comes to liquidate, or in this case, shift overall structure, which is now also, as you recall, being met with overall what? Oh, shit. Let's draw this back in. There we go. Which is now being met with what? Multi-level Ment FX block shifts. Because remember, Ment FX blocks are also larger order flow being put into the market. So even though, as you can see, candlestick structure might be breaking, overall order flow could be from here to here to here to here to here to here, and this is the first break of it, right? And now you can expect, something of this sort to occur, and at the same time you have candlestick breaks and you have demand zones where you can expect price to trade into, okay? So in this accumulation, after the spring, you can have a test. Now, after the spring, this is something you have to understand, and make sure you're taking notes on everything I'm saying right now. Ultimately, I'm still going to answer questions on Wyckoff, that's no problem, and we'll answer more questions during the webinars. But ultimately, after understanding this, there should be no question about how Wyckoff occurs. And especially if you go back into your charts and study Wyckoff, this should become relatively apparent and understandable as a type 1 schematic. After you have this spring, price does not have to give you the sign of strength first. There are multiple things it can do, right? So after a sign of strength, let's just do the most common. You can usually have prices come back down to give you the test, which will test potential demand zones in these areas, like so, right? And then you'll see price begin to finally give you higher prices. Now, it might start to shift and give you more bullish prices in here. And again, on lower time frames, you might already start to see it. You can undergo mini Wyckoffs, like so, right? So this whole thing is the same as everything we just saw here, but on a lower time frame, right? That's the same thing. It's just undergoing it in a little bit of a different way, as you can see, right? So remember, just think about these points here, right? You have lows, or I guess you could say lows, liquidated, lows, liquidated, lows, liquidated, lows, liquidated, lows, liquidated, lows, liquidated, shift, right? MetFX block, break above, sign of strength, looking for the test. Same thing here. Shift, MetFX block from this high to here, breaks through, comes back down, and now, excuse me, and now looking for the shift higher, right? And that's all part of this potential move here. And all these moves inside here after a test are known as your LPSs. So let's actually draw this out now as an actual overall label, okay? So first of all, hopefully I can do this. Oh, beautiful, I can do that. That's so nice, thank God. Okay, let's move that over here. Let's get rid of this. 2 schematics. Let's make this a little bit bigger for you guys. Okay, so ultimately, okay, let's go like this. Preliminary support. All right, so your first point that we spoke about, which is your bigger change, is your preliminary support. That is what is known as PS, preliminary support, right? Okay, so I'm not going to type them out because there's no point. They're all in the terminology section in our Discord, as well as on the Star Charts website available in section 3. That website is vital as well to your understanding. Now, you don't need it. You can use everything that I'm presenting here, but if you want a better understanding of what these zones are and why they function the way they do, then you can. But the most important thing is that it's nothing more than the creation of liquidity, the liquidation of it, creation of liquidity, liquidation, creation of liquidity, liquidation, and then you have the final shift and markup, okay? See, there's preliminary support, follows that down to the low part, which is your selling climax, right? Follow that up to the next swing, which is known as your automatic rally. Usually, like we said, will be under this point, okay? So remember, back to everything I said concerning this, you have to make sure you took notes on everything I've said. The secondary test, which oftentimes will come to either create equal lows. Oops, forget about that for a second. Which will usually come to either create equal lows, maybe, you know, some kind of trend line. So in this case, you can see the trend lines forming. There'd be retail that would be funneling into these buys already, okay? Test that area. That's fine. Maybe test some kind of demand zone in the selling climax. That's also very possible. And again, if this was a higher time frame, if this, for instance, was a 4-hour chart, inside of this point, just for the idea of fractals very quickly for you, you will have what? You'll have price coming into it, right? This could happen inside of here. And you can literally be a participant of this buy because you understand that it's part of a larger potential schematic, right? So there's going to be schematics. So this whole thing right here is repeating inside of here, right? This is the idea of fractals. This will happen everywhere as well, but we're not going to talk about that right now. Similarly, if you remember back to the first subsection, and you know how we circled all these areas of potential accumulations, if you looked at this price action here on lower time frames, you're going to see distributions here. You're going to see accumulations here. You're going to see distributions. You can already see it, right? Undergoing here. You're going to see accumulations going here, right? Again, in this own schematic that we just drew, you are already seeing the other schematics that can unfold within it, right? Because a schematic is made up of multiple schematics. That's part of it. Because those schematics inside that schematic are doing the same thing that the purpose of the overall schematic is, which is liquidating some people out of their positions, most people actually, and getting involved on the opposite side of those trades to take it to a potential area of liquidity or anything of that sort. Anyway, let's continue this labeling. After the ST, you will usually see what I call, now this is not always the case, not everybody calls it this, the SOS and B. Now this SOS and B, the reason we call it a sign of strength is because it's getting above the AR. Usually we don't want to see it get above this, or if there's a wick, it's fine. Remember those notes. I'm not going to talk about them anymore because we've spoken about them in the past. This could also come here. That I wouldn't label as an SOS and B, right? It's not that important, but usually if it does come this high, I will label it. If you didn't label it, think about what this is doing. It's creating those same patterns, xylophones, I don't know, whatever the fuck they call it, but there's xylophone patterns, triangle patterns in here. There's the breakouts, like liquidations. People start to sell, potentially the retest, right? So even when I draw this random like little schematic, you start to see how retail can get very trapped by what they're being taught. This is how retail gets trapped. They don't know how to trade these type of things. The breakout, they don't know if they should buy this. Then it breaks back down. Then they start seeing what? Trend lines, right? And you can see everything just gets traded through. And this is why retail gets very confused. And this is why even I get confused looking at retail. I don't know what the fuck they're doing most of the time. So you have this move up. That's your SOS and B. Okay. That's what we call it. You can call it that. You don't have to. Then what do you need? The liquidation of the ST. And again, there could be a low here, but this is not an ST and B. So the next thing that's going to happen is called an ST in phase B. Okay. This can never be an ST and B. It has to liquidate the ST. It's very important. Remember these rules. They are crucial. Remember these fucking rules, okay? Here's your ST and B. Fantastic. And again, the reason you're in this mentorship is because even when this does get confusing to you, you can ask. And I'm here for you. It's all good. But also, you need to understand this is a personal journey as much as it is a journey that I can, kind of help you with. But at the end of the day, a lot of it is going to be about your own understanding. And what's important is your understanding. And that's what I care about. So you have this ST and B, liquidating the ST, the move back up. And again, all this price action here really doesn't matter unless you're trading the lower time frames. Because again, like we said, inside of these points here, if we were to zoom in and look at it inside, you're going to see price action. And again, you can already see this type of thing. Breakdowns in price, right? Breaking structure, leaving behind areas of what? Supply. You can see that this move came to mitigate supply. Right, and inside of there, this peak, so if this is that peak right here, right, same peak, let's imagine that same peak, on a lower time frame is going to look like what? Big stopping action of some sort, right? Buying climax, AR, ST, UT, UTAD, so, or spring, right, same thing, so we'll talk about that in a second, the breakdown, test, breakdown, right, and that's what you see here, and that's that breakdown, and you can be still a part of this overall sell from that area, so this is the same thing inside of that area. There are schematics on each end. And remember, back to our original thing, snowflake rule. As long as highs are being taken out, there's a schematic undergoing. The best schematics are the ones that you can label properly and see price delivering to you in such a way, right? Now, after an ST and B, in a type 1 schematic, so this is only in a type 1 schematic, you are going to see a spring, okay? That spring has to liquidate the ST and B, and usually will liquidate the selling climax. So again, I've said these rules multiple times now, so you should understand those. After the spring, you will usually see a sign of strength, followed by your test, which will test potential last areas of demand into your last points of support, like so, and then you'll have the mark up, okay? And then price will take off. Now, if you went to the stock charts website, which I advise you do, if you haven't, pause this video right now and just go take a look. You have 5 phases ultimately. You have phase A, which is basically up to the AR. You have phase B, which is everything that happens here, basically, until this spring. So this is all kind of phase B right here. Okay. You have phase C, which is the A, B, C. Yeah. You have phase C, which is usually the spring. You have the phase D, which is usually the test, I believe, if I'm not mistaken. And all the LPSs too, I believe. And then you have the phase E, which is the markup, where price begins to basically take off. Right? You have phase A, which is the stopping. Wow, this is shit. You have phase A, which is all the stopping action. Phase B, which is the transfer of most of the, in this case, dumb sellers into buyers. Because remember what I drew in the last subsections, where they transfer it by buying up all those orders into phase C, which is potential final points of mitigation or liquidation in this case. Phase D, which is now the mitigations of those areas in the form of tests, mitigating, and last points of support where they could undergo again on lower time frames. So don't forget, inside of that area on a lower time frame, there's going to be the same thing that you see here. There's going to be the move down, right? Selling climax, AR, ST, STB, spring, move up, test, continuation, okay? And in phase E, right here, excuse all the very, very shitty drawings. It's because I'm on a mouse, but it's whatever. You have the markup, and that markup is where you make your profits. And again, even though you might miss this, what you don't realize is inside here, inside here, inside here, even inside of like here, right? Based on how low of a time frame you might be looking at, or based on how high of a time frame you started on, there are going to be confirmations of these moves, okay? So those are all your phases. You can go check out the Stock Charts website, and you will see them similarly, okay? Now, something that's important and that you need to recognize is that this SOS will not always happen, and then the test will happen. What you could have is a move like this, a test that happens, like so, the test, and then you can have the SOS, okay? This is also possible. And then this LPS could come and be created in potentially this demand zone, or in other cases, could be even higher up, right? And this is all potentially higher up. Okay, well, you understand what I'm saying, but these could all be higher up. These can happen in a multitude of ways. The test does not only happen after the SOS. The test can happen, and then the SOS can happen. The only way an overall schematic becomes valid is basically after this sign of strength prints, ultimately, okay? Now, some people might have a different way of thinking about it, but usually after this sign of strength right here, breaking above the trading range, which is made for you by the AR or the SOS. So we don't trade support resistance, but when you have Wyckoff occur, there's what you know as a trading range. This can be considered your overall trading range right here. When that breaks above it, that is ultimately a confirmed overall schematic, especially if you've undergone all these areas here. And after that has occurred, you can expect most likely bullish price action. And that's how we get involved using these areas, okay? And again, you have multiple demand zones. So after the sign of strength, you usually have it to come test a few times, and then you have it take off. Now, what's also possible is it can come and test a few times, right? It can make your SOS, right, rather high up, and it could have what we call an LPS, right? So this could be your test, and then your LPS, it doesn't have to come down here. So this is something you need to understand. It doesn't have to come here. What it could do very easily as well is it could have a backup just like this, have this same schematic play out just like that, right? So let's just draw out the schematic again, just like that. Here we go. Here's your schematic, your break higher, your test of it, and your continuation, right? It can happen this way as well. And maybe it tests this demand zone right here, right? Because again, remember, if we zoomed in on this right here, this whole, oh yeah, it's really ugly, sorry. But this whole thing right here is a schematic, right? PS, selling climax, AR, ST, STB, or in our case, let's just do this to make it more understandable. Here we go. PS, selling climax, AR, ST, STB, spring, type 1 schematic, sign of strength, test, continuations, okay? That's what a markup can look like after. And again, as you remember all the phases here that we drew in, the same thing happens here. You have your PS, your selling climax, AR, so phase A, phase B, phase C, phase D, phase E, right? And then you have that markup. So phase E is like this whole thing here. And then you have the markup. That's what an accumulation looks like. This is how you label a type 1 accumulation, okay? Let's zoom out here. Let's go back to where we had this more normal because I liked it more. It looked better. There we go. There we go. Fantastic. So this is your example of a type 1 accumulation. And don't worry, we will look at examples of these live in the next video, but you need to understand this too. So if this is your type 1, what is your type 2? Let's take this all. Let's move it over. Fantastic. Have it over there. Let's look at a type 2. A type 2 schematic is the same thing. It's also undergoing all this same stuff, and it's undergoing these overall structure shifts and everything of that nature. Sorry for my squeaky chair. How's it look? We have major moves down. Okay, we have big moves down, whatever it might be. Then we finally have a big hiccup, right? Some kind of hiccup. Now again, in this case, we're going to use a larger hiccup instead of a consolidated one, just so you understand that it can be delivered to you multiple ways, right? Followed by, everything is the same up until this point is what you have to recognize. You have your move down, and again, this move can happen like multiple times like this, right? It can do it can do literally this a few times, and then boom, selling climax, okay? That's your selling climax. Follow that up to your potential AR. Follow that down to your next point, which usually, like we said, should be inside the demand zone of the selling climax, at the selling climax, and maybe a wick below it. That's okay, but usually you want to see it create liquidity. That's the point of it. It's creating liquidity, ST. Then, in some cases, you have an SOS and B, or in some cases, you come to test inside it. Let's make it test inside it. Everything's the same. This could be higher. Doesn't have to be. Now, we can play around in this area. It's all good. We can play all over this area if we want. But until we get a low below this, we do not have an ST and B. Remember that. None of this price action matters. Now, you could be looking inside this for its own schematic, and there might be one in here, right? And you might actually find buys up into some points here, and then it finally falls and makes your ST and B. That is now a valid ST and B. Now, the difference between this type 2 and this type 1 is that this is the lowest point that there's ever going to be in this. And what's going to happen after this low point, because remember, an SOS oftentimes, like I said, will validate a schematic. Now, instead of it going and making, this phase B play and then coming to make this low, instead what it will do is it will come and make a new high. Boom. That is now your SOS. That's this point right here. And what it's done is it's after making this ST and B, which is this, it didn't make a spring. And instead, it began to shift in price. And again, you can recognize that we have MentFX blocks. You have overall structure shifting. You have overall structure being moved higher, right? And again, it's nothing more than structure being delivered to you in a different way. You can have a move back down that comes to test last points here that take out liquidity, or a move down that comes to the last point of candlestick structure. Price does not have to come to here only. It can come under it, but that does not mean that we've shifted structure. All it means is we're coming for a deeper retracement. So let's make it on this structure, test it, and then you might have, right, the huge moves up. Now again, as it comes into here, it could undergo a fractal, what? Accumulation, right? Same thing. And then make new highs. Everything's the same. Do not be confused by all the points in it. The most important parts of this entire schematic, right, is PS, selling climax, AR, ST, STB, SOS. Everything in between are still schematics on lower time frames, right? And there's a schematic here that you could have sold into, right? As this schematic sold and there was a supply zone here, these cells were all valid too on lower time frames. But on this specific schematic, these are the only points to you that matter. And again, we can label it similarly, okay? Your PS is the big stopping action. Your selling climax is the big move down and then the stop after it. The AR is the next swing that is presented to you in the market. The SOS and B, the ST is a point after the AR, usually on similar terms as the SC. So we can make it literally equal if we want here, just for the sake of explanation, right? Creating what? Liquidity. Creating what? Liquidity. We love that shit, right? Creating liquidity. People are getting involved in this market on the wrong side already. Now, if there's not enough reason to go higher, we won't make this SOS and B. So you could label this as an SOS and B, but in reality, you don't have to, because all it's doing is it's forming liquidity in this trading range, right? That's a trading range, just like this is your trading range right here, right? But we don't use the trading ranges. You don't have to think about that. All we care about is that there's just an AR high here. Just remember that. The low that liquidates the ST, right? Doesn't have to liquidate the SC, but usually does, like we've spoken about, is known as your ST in phase B. And again, this is all part of the phases, but don't worry about that yet. Now again, what happens in a type 2 schematic is that your ST and B actually equals spring. It's the same thing. It acts as a spring, okay? And the only way that you can differentiate between a type 1, so pay attention, take notes, between a type 1 and a type 2 schematic is after the sign of strength, after this sign of strength, break occurs. Because what this shows you is that overall price action, order flow wise, has most likely shifted on behalf of overall smart money. And in this case, it's not a type 1 schematic where it made a spring and then shifted. It only made an ST and B that acted as a spring that then shifted price. Now notice how I drew this in this time. In this case, we had an SOS and then we had the test pretty much on the LPSs. But in this case, we had a test, then we had an LPS, right? And then we finally had the sign of strength. And after that sign of strength, we had the move back down to make another LPS, which on a lower time frame, remember, there's a demand zone here, right? And on a lower time frame, so imagine this was actually, let's do this. Let's imagine this is lower. There we go. On a lower time frame, what's inside of this area right here? Well, if you've been paying any attention, on a lower time frame, there is a PS. So there's a lower move. There's a PS, selling climax, an AR, an ST, an STB, breaks, and continuations higher. And again, this itself, you can circle it and you know there's Wyckoff there. It's a snowflake rule. And at the same time, you can label it PS, selling climax, AR, ST, STB. So it's a what? A type 2, because that STB right there acts as an STB slash spring, right? Then your test, there you go, and your markup. And you can be involved in any of these positions. Now, the most important thing, again, we're going to look at this on real charts in a second, but the most important thing for you to understand after all of this is the following. This is an accumulation schematic, type 1. This is an accumulation schematic, type 2. The second you flip them, you have the opposite side of things. And now, instead of all this stuff, let's talk about what we have. The exact things we spoke about are exactly the same concerning how these things form, where they form, and how they're going to be delivered to you. Your type 1, here's your 2 schematics. Here's your type 2. Let's delete this, delete this, delete this, delete this, delete this, this, and this. Okay? Your type 2. Your type 1, type 2. Same schematics. Now in this case, we have a big bullish run. And now what do we have? The only difference that we have now, again, realize from section 1 and section 2, you have nothing more than the transfer of sells into buys and buys and sells by way of overall structure, right? Candlestick structure, shifts in candlestick structure, tests of mitigated or unmitigated supply and demand zones, so in this case, supply zones, and the breakdown from those zones. Now, if you want to go and label and learn how to label the other side, check out the stock charts to understand all the points of it, but ultimately it's the same thing. So let's do this relatively quickly. Had this big up move, big stop in it, you have your preliminary supply instead of preliminary support. Fantastic. Move up to your buying climax. Same thing as the selling climax, but it's at the top. Move that down, same thing, to your AR. Same rules play. To up to your ST. Usually test, in this case, a supply zone usually can make equal highs as well, but in this case, it didn't. Doesn't matter. It's creating liquidity. Move that down. Instead of an SOS, it's not a sign of strength, it's a sign of weakness in phase B. A sign of weakness as in price most likely wants to start to break down. Break down, okay? You have this move up. What is that? The move that takes out the ST is your ST and B, or since it's a distribution now, it's an up thrust. That's what we call it, a UT, right? There's just different words. It's nothing more than different words to explain the exact same thing. UT, this is what? A UTAD. Price breaks down. It can break down and then come back, making what? The test, right? And as it makes this low, instead of it being a normal sign of strength, what is it known as? A sign of weakness. And instead of this being what? A last point of support, it's now a last point of supply, okay? Because all of this, of the sellers in this market, I mean, all of the buyers in this market have been transferred into sellers on behalf of the composite man and are now going down, right? They want to take the market significantly lower. What happens is you have a supply zone, right? Overall in this area, let's say you have a supply zone on a higher time frame in this zone here. So what's going to happen is all those areas are going to be mitigated, and as they're mitigated, this is the mitigation of it, you will undergo this potential move. And again, it could be like this, right? Or it could be like this in terms of a POI or a supply and demand zone. So again, if you don't understand why I'm drawing this in and saying this is a supply or demand zone, you have to watch section 2 because we deal with how to spot potential supply and demand zones in that area, okay? Similarly, you have your LPSY. And again, if you wanted to enlarge this overall price action in here, you are going to see the same thing, the snowflake rule. There are highs, those highs are liquidated, and you have breakdowns in price. You have the buying climax, AR, ST, upthrust, UTAD, breakdown, test, continuation, right? Same thing fractally, okay? You just need to recognize that. Now, the same thing is happening on this side. You again follow up to where it has a large pullback of some sort. That's your preliminary supply. Follow that up to your stopping action, your buying climax. So stopping action into your major stopping action, buying climax. Follow that down to your AR. You can get rid of these lines now. We don't need them. Okay. Follow down to your AR. Actually, we'll leave them on. Why not? Follow that up to your ST. Doing what? Creating equal highs. In this case, instead of equal lows, it creates equal highs. Follow that up. Instead of what? This being an ST and B, it becomes a UT. Now, because there's no UTAD after, before this break happens, we know that this UT most likely from this area functions as a UTAD. So again, a UTAD and a UT/UTAD is the same thing based on whether a type 2 or a type 1 schematic is undergoing that location, okay? And again, in this case, you have the test that happens before the break. You also have an LPSY that happens before the break, and then you finally have your sign of weakness that breaks below structure and makes new structural lows, important ones. So you can maybe even consider this, right? So the sign of weakness can break down below the AR, below these points, or even below the PSY. This is also quite important sometimes, just like that, right? And these are not always going to be the same, which is why I gave you the exercise of circling multiple areas of schematics that occur, okay? And then you have this move back up that causes another, you'll have this move up that causes another LPSY, and in this specific case, what's happening inside of here? Snowflake rule. We want to look inside of that. If we did, right, let's follow along with these. You have a big move up, it stops, right? That's your buying climax, potentially, because before that, there might be even a smaller stopping action. So what I mean by that is, let's just think about this area. You have a move up, right? Maybe an actual stopping action, and then you have this buying climax, and that's this point right here. AR, ST, UT, breakdown, right? Type 2 schematic, right? So remember, somewhat of a stopping action, PSY, and then this high is represented by this high, and this highest high is represented by this highest high, right? And then there's the equal highs here, and that gets liquidated. So again, anytime you have that, you're having a schematic occur. So hopefully, this gave you a little bit of understanding, pretty much all understanding, of how Wyckoff forms and how you have only two major schematics, okay? Now, there are more schematics and they are like reaccumulations, redistributions. We will talk about that in the next subsections. But the most important thing that you need to take from this is one, especially from the last one, that you have multiple Wyckoff schematics that occur throughout price constantly. Secondly, the best looking ones are the ones that undergo most of these phases the way you have them seen here. The third thing, that they don't all look the same. The fourth thing, that there's a multitude of ways that these points can be delivered to you, and that you've taken notes on every single note I've made concerning how these points can be delivered to you. The fifth thing, that there are moves within price that you can zoom in on and will be Wyckoff schematics on lower time frames because, like we said, they happen everywhere. And most importantly, you go for your own study and find how these occur in certain areas. Feel free to go find a normal area of supply or demand, draw that area out, and then look at how price approached it, how price shifted by way of order flow structure and candlestick structure. And as you do that, attempt to give the overall schematic an actual labeling to see how it underwent the areas of liquidity creation, liquidity manipulation, mitigation, and continuation. Thank you so much for watching, guys, and I will see you in the next one where we will deal with schematics in actual price action because they're not always going to look the same, and even though this might look confusing, this will become somewhat second nature to you over enough time. Thank you, and I'll see you guys in the next one. Take notes, by the way. Mwah.